Some stocks are really good for filling a specific purpose, and I think Ford is positioned for that, specifically with high dividend yield. This is a stock that you are going to very likely, it's proven this over the long term, you're going to get a share price that's pretty stable. Maybe it has some peaks, maybe it has some valleys, but you're going to get a high yield from it. That's just how it is. We're going to look at the history a little bit. If we go to the all-time chart, we zoom out. Basically, since 1987, you're running basically dead flat. Now, of course, you have dramatic highs, you have dramatic lows over this time frame. And 1987, there's so much that changes over almost 40 years. Don't get me wrong. I usually don't like to look much past 2000, but even around 2000, you're a little bit high in the dot-com bubble. But historically, this company is going to run sideways, and you're going to get a high yield from it. So if you're looking for a crazy growth stock or a good growth stock, probably this isn't the right stock for you. But if you're looking for a cheap company that gets a good yield and has a track record of doing this, I think Ford is not a bad option at all. It's just a specific company that's good at a specific thing, at least right now. That's what it's good for. So you get very low PE, very low Ford PE. If this company runs sideways, it's not going to really go down because that's what it's expected to do, at least right now. Obviously, if there was a recession or something, it would still probably go down. If the company performs like it has been, it's probably going to be about the same. That's just the expectation with it. It's valued like a company that is at that super low PE, super low Ford PE, dramatically below the S&P 500, nearly a third on each, if not lower. And then you get a solid dividend, right? Over 6% right now. It's not always going to be over 6%, but it's going to be somewhere within that range, probably. The dividends, I mean, we can talk about, oh, it's up, oh, it's down, it's dramatically high, it's dramatically low. But if we go back to 2016, right, we're basically flat. It was 85 cents per share payout, 78 right now. You had a really high in 23, really low in 21, even though it was hitting peak, because you're probably looking at good sales there. EV hype was in full effect around 2020 and 2021. It's obviously cooled down since then. You're going to get valleys, you're going to get peaks. And there's nothing crazy about it right now. It's right in that normal range. So this year, maybe this is 6. That's what we're expecting. Maybe next year's 5. Maybe it's 7. The share price is about the same. But if you can look at the stock as much as you want, but in my opinion, unless you can see something I'm not, what you should expect and what you can expect is this company is going to produce results right around this. It really is. So if you're looking for a dividend portfolio that gets somewhere 5, 6, 7% yield, maybe no share price growth, and then maybe you set 1% aside to reinvest just to make sure inflation doesn't beat you over the long term, maybe a little bit more if you're conservative, and then you take the rest of that yield and do whatever you want with it, right? I think that's fine. I think that'll do good. That's what I would use Ford for personally. I wouldn't hold it as like, oh, this is going to go up a bunch. It could. You could do very well in it, but there's a lot of competition in the automotive industry from the Teslas, from Toyota. There's just so many companies in it, and there's lots of regulation. Clearly, you got to keep people safe. It's just a tough industry to make it. Even startups, you got the Rivians of the world as well. There's just a lot of competition in this specific industry. That doesn't mean Ford is a bad company for it, but it just means it's not like, oh yeah, this thing's going to do crazy well, in my opinion. We can see Schwab does think it's going to do really well over the next year. They think it's going to be in the top 12% of stocks performing over the next year. That's a very, very good rating for them. So maybe they see something I don't. And if you guys disagree with me, that's totally fine. But they think it's going to do very well over the next year. They give also Morningstar gives 5 and then no economic mo. I don't really understand that at all. I get lots of competition. I understand that. But there's people that really like Ford. There's a good brand awareness around it. There's people, like I said, almost like, at least where I'm from, there's like, oh yeah, we drive Fords and things like that. So, and then you get the Chevy people as well, but there's some economic moat there. So none is a bit extreme to me. I would put it more closer to narrow, but then again, I hate the 0, 3, 10 scaling they allude to here. Anyways, I've talked about that many times on this channel. You get 3-star rating there, buy, avoid, hold, low weighted key issues score. If you're concerned about that sort of thing, it's something to note. Obviously not going to dive too much into what Ford does. I assume everyone watching this video has at least a decent grasp of what Ford does. So your Ford PE is a little low, lower than normal, but it's right in that normal range, somewhere between 5.3 and 7.2. So you're right in that normal range, and that's how stocks are. They fluctuate a couple 10% here and there. That's just how it works. Nothing crazy there. You're right in the normal range. And then analysts, you have about 7 of the 25 saying buy. Then the rest are saying hold. or underperform. That's pretty normal as well for a company that's not really expected to grow. People don't like to go out on the limb and say, oh yeah, it's going to be great, or this is going to be terrible, because it's, their reputation and stuff like that. So you'll get a lot of people saying hold, and that's probably not a bad rating on it either. Probably about where I would have it. And like I said, that's pretty normal. For growth stocks, you'd want higher. For Ford, it's not really concerning. So I think I've covered most of what I want to in this video. I think Ford as a long-term hold is fine. If it's what you want to get from it, you want a high yield, you want something stable, really low PE, this is a good pick. But there's nothing screaming at, oh yeah, you need to buy right now on this. And I probably wouldn't, even if it was anyways, because, you guys do your own information. But I will say, oh, I like this one better than this. So I think Ford will do fine long-term. You shouldn't be super scared of it. But that's all I have for this video, guys. If you enjoyed, I appreciate if you liked or subscribe. I do daily stock content on this channel, and I appreciate all of you for watching.